All right. Well, let's get going. So this webinar is about how to create a fundamental outlook, and this is something that a lot of retail traders, I think, myself included, have had quite a difficult time comprehending, just because in the retail market, it's so geared toward the technicals, and the fundamentals are kind of mysterious, and there's just so much data out there. However, I think if you can create a very simple fundamental outlook and fundamental bias, it'll put you just miles ahead of other traders. And it's really simple. There's really, it's not too much to it, and it just will drastically help, and you'll see the difference in your trading. All right, so let's get started. And just a little info about me, because I didn't come from a professional trading background. I was an industrial designer, designing all sorts of different things, from consumer products and websites to interfaces to environments, and just a whole range of different things. And then, I always had in my mind, this idea to start my own business, and I was always interested in trading, so I went for it. And in 2008, I had been trading before that, but I started trading full time in 2008, right when the crash started. So it was an interesting time to be watching that and to be involved in the markets, that's for sure. And my history in trading, from the retail side, has been mostly technical. Okay, and then I looked at a lot of different markets. I started off in stocks, went over to options, looked into the futures, and finally just ended up with Forex. Okay, so going through, like I said, as a retail trader, it seemed that everything was so technically based, and I really wasn't having quite the results I was looking for, and it just seemed like a piece was missing. Okay, and then I met Brad Gilbert from Traders for Traders, who's the CEO and founder, and was trained by him. So he really brought me into the scope of the fundamentals, and his background of like 20 years of trading in the institutional banks. He had insight to what was important and what was not important. Okay, and I was missing a big piece of that puzzle, and that was the fundamentals. All right, so as I got to know Brad, opportunities started to open up. He said that I was rather easy to train, and that would I like to come on board and see how I can do with the Traders for Traders team. All right, so that's my story, and let's move on. So the goals of the webinar is to bridge the fundamental gap that a lot of the retail traders like me had a hard time understanding, and then one of the important aspects of that is to be introduced to correct fundamentals. All right, and then in the end here, we'll create a guide that gets you into that fundamental bias, and you can use that. It'll be rather scalable. You can go into very, very simple aspects of it, or you can start to dive a little deeper as you get more comfortable with the fundamentals. Okay, so fundamentals move the markets. All right, this was a key point to learn from the retail side, that any major moves all start with fundamentals. And that's just the way it is. Most of the bigger players, all of the bigger players, look at the fundamentals and make their big trading decisions based on the fundamentals. All right. So this is just an hour chart of euro dollar, and I just wanted to show here some of the fundamental releases within the chart, so you get an idea of these moves and trends that all hinge on fundamental data. Okay, and we can start off here with the Spanish manufacturing PMI, and that was a little worse than expected. So we saw a drop. Just some hours later after that, there was Eurozone unemployment, and the result was better than expected. The uptrend started to continue again. We saw a nice boost here. So just to get an idea of some of these moves here, the horizontal gray lines, those are, let's see, I guess I can annotate here, right? Just a moment. Yeah, so, oops. Yeah, it's not the one. Let's try this again. All right, yeah, so these are the 50 pips, okay? And that's that's all of the each move here is 50 pips, okay? So you can see that that's roughly about 50 pip move, but the trend continued, okay? And then this was just last week, beginning of last week, we had Spanish unemployment and services PMI that was much better than expected. Okay, so we saw a nice boost out of that, and then the market went sideways for a while, and the reason being was that the big event for the week last week, obviously, was the ECB press conference and rate statement and the rate decision. Okay, so going into that, markets get a little quiet, and then there was speculation here that for the last few releases, Mario Draghi has done nothing, okay? And that has actually been rather bullish. People have looked upon that as being rather bullish. And interesting enough, the statement came out, nothing changed, okay? And we saw the market, you can go back and you can watch the video, the ECB, and I'll cover that in just a minute. But as he ended his statement, the market rose. Okay. Now, technically, it went to new highs and yada yada. But the idea here is that there was no change. He didn't say anything that changed the viewpoint of the currency direction. All right. Then some negative comments started to come out, and he said that he viewed the euro as being a little too high, and then. Down here, he had another comment that he said they were comfortable with making a rate decision at the next meeting in June. Okay, and that's when you saw the sell-off, and the sell-off was pretty dramatic. You can see this was hundreds of pips. It continued it still continues today. All right, it's not dropping it quite as much, but it's still continuing, and this is the major theme going forward. This is all based on not even a rate decision. It was just based on a press release or a press conference and some of his comments within that press conference. And then on the back of that too, this was on Tuesday in the European session, we had the worse than expected German zoo numbers, and we saw a drop there again, which continues to the downside. All right, so that's critical for going forward, because we have to understand that the fundamentals are key in moving the markets. Let's move on to the next slide. Okay. Okay, just a minute. No. Okay, here we go. All right, I got it. So what is fundamental analysis? Okay, now this was a quote I got from Wikipedia, I think. It focuses on the overall state of the economy and considers factors including interest rates, production, and earnings, employment, GDP, housing, manufacturing, and management. Okay, now that's not really true. I mean, right off the bat, we're kind of getting a false impression of what fundamental analysis is. This is a part of it. And this is the part that we all kind of understand of what it is. It's a lot more in depth than just that. And the way that it's, I think, best to look at it as traders is to look at fundamental analysis in three different aspects. And we're just trying to keep it simple. And this is in general here. The aspects we want to look at are the central bank sentiment, the economic data, and the geopolitical events. Okay. Now, the overlap of these, have different outlooks or different. Some of the geopolitical outlooks may hold back some of the bank sentiment, or maybe there's good economic data, but the geopolitical events may hinder the movement in the markets, even though there's good data. Okay, the nexus of all this is right here in the middle, and that's when you get pure direction. Okay, that's when you get all of these things going together, and you get nice, long-lasting trends that continue for years. All right, so let's move on. The first aspect here is the central bank sentiment, and the general goals of the central banks are to maintain price stability, basically to control inflation and deflation, and to maximize employment and the production output. All right, that's their job. All right, and we want to know who's controlling this, because these it's basically the central bank governors, and they wield immense power through their monetary policies. All right, they make their monetary policy decisions based on the economic data to be objective and clear. But we want to. We'll get to that point later about some of the economic data. But that's their guidance, and they have a lot of other tools that they can use besides just interest rates. Okay, and we've seen that play with the global financial crisis. Okay, a lot of quantitative easing, or a lot of creativity. These guys have been working really hard since the crisis. As traders, what's important though is that we want to know what they have to say. All right, because they control and guide the economy. So let's see, the guide to the central bank bias. We want to follow the interest rate decisions. We want to read the central bank sentiment and statements, and we want to watch, listen, and read any important information that has to deal with the central banks and the press releases and the speeches. And then we'll create a bias and an outlook. All right, so interest rate decisions, this is the main event. All right, so check your economic calendar and make sure that you know when these happen, and you can see market speculation that already takes place beforehand based on the event to come. Okay, we're seeing that right now with euro, for example, and you can bet that it's being built into the price right now. If there is a rate decision drop in interest rates from euro and the ECB, we're probably not going to see too much of a movement in price, because we're seeing that movement right now. All right, and then we want to attend all of these rate decisions and press releases as well, because we can see that with the previous release last week, there was no change in interest rates whatsoever. But it was the press release that made all the difference. Okay, and we can any change in these interest rates, and you can usually see pretty big move in price. All right, so reading the statement. Okay, now this is really important aspect, because as I just mentioned with Draghi, his statements and just with some words, he dramatically shifted the market. Okay, so that came through not necessarily the statement, but that was the press release. But I'm going to go through a statement here, and I'm going to show you how these central bankers can move the markets with their statements and releases. Okay, so it's important to get to know these guys. That's for sure. These are the 8 main central bankers in with the majors. This is for the Swiss National Bank, Hildebrand. We have Carney, Yellen, Draghi, Palaz with the Bank of Canada. Then we have Wheeler with the Reserve Bank of New Zealand. We have Stevens at over in Australia, and then we have Kuroda in Japan. All right, we want to know not only who these players are, but what their policies are, and get a feel for the language that they use within their press releases. All right, so here's an example of a statement. All right, now this is from Glenn Stevens from the Reserve Bank in Australia. And this was back on November 5th, 2013. And you can see here that the top line, it just says that at the meeting today, the board decided to leave the cash rate unchanged at 2.5%. All right. You can see that these statements are, there's not a lot of text here. They're very compact. They're very direct. They're very transparent, and the wording is quite simple. All right, so you don't really have to read too much. It doesn't take too much effort to get a huge amount of information on which direction these central bankers want the currencies to go. So anyway, there's this one. It's just 2 sentences down here near the bottom. This was the introduction of this statement. Was that the Australian dollar, while below its levels earlier in the year, is still uncomfortably high. A lower level of the exchange rate is likely to be needed to achieve balanced growth in the economy. Okay, that was it. And here's the result. Here's the statement. And then here's the result. This is when it came out. And you can see the sell-off, and that's probably around 250 or 300 pips, just right there. And that all you had to do was just read the statement. And so let's go on, continue with this statement here, and look at the statement that the RBA came out with on February 4 of 2014. Now, this was, a lot of times these statements, they're exactly the same in wording, and they just kind of repeat them. Maybe there's just subtle shifts in the wording, and it's really good to be aware of what has been changed. And what has been changed in this release was that statement about the uncomfortably high level of the Australian dollar. Instead, they put in something different. They're looking ahead, the banks expect growth to remain below the trend, yada, yada. But that statement wasn't there. And instead, we had a rather kind of bullish outlook. Beyond the short-term, growth is expected to strengthen, helped by the continued low interest rate and the low exchange rate. All right, that's a signal. And the signal was that it's, he's happy with the level of the currency. And here's the result. Dramatic rise and very, very bullish outlook. And this was no decision in the rate was made. It was unchanged. And this was the result. Right, so you can see that just reading a few paragraphs from the central banker, you can see what kind of effects they have on the market. Okay, so kind of summarizing on the statement, they're conservative, they're simple, they're transparent. It is these central bankers' goal to be transparent with the market, to guide them in a certain direction, the direction that they want them to go. All right. So you want to understand the rhetoric in the key words that are used in here: accommodative, forward guidance, excess capacity, moderation. You get the idea. There's several. The rhetoric and the way that they present the statement is important. All right. So, and then the next thing to do that I think is quite important is to compare and contrast with previous releases. This gives you a lot of insight on the direction of which they want to go, and then ultimately affects the price of the currency. Okay. All right. So point number 3 was to read, watch, and listen. So watch the press releases after the rate decisions, to listen to the important speeches by these governors, and to filter central bank news articles that's out there on websites and in the press. Okay. All right. So read, watch, and listen. Watch the press releases. This is a fantastic tool. You can go right to, for example, with the ECB right here. You can go right to the ECB website and you can watch the release in real time. I think it might be delayed like a couple seconds, but it's basically in real time. And you can listen to, he'll read the statement and then field questions from the journalists. And not only do you get a lot of information here, because not only do you get the text and understanding with the rhetoric, but you see the body language and the kind of reaction that he has. In a sense, it's kind of like playing poker or something, that you can see where they're coming from with the videos. All right. And again, this was the press release, and no statement. This was just on the press release from Draghi. And he ends with no change in the statement, but then the negative comments, and boom, that's when we had the dramatic drop. So very topical and fits into the markets that we're considering right now. And then look over at the websites and filter through. Do searches for Mario Draghi, or whoever, whatever governor you want to cover, and get an idea of where they're coming from, and other reactions from other analysts and economists, to kind of give it yourself a perspective here and a bias. All right, so that's what it all comes down to, is creating a bias. This is important to have a bias for where you think the direction of the currency is going to go. So just keep it really simple here. I mean, just write down the main points, and just have some sort of bias. This was a kind of key for me, was to start writing these things down, and to have some sort of outlook or bias based on the objective research that I've just done. And a lot of times you're wrong, especially just starting off. Maybe you don't have all the information yet, but that's okay. I mean, you'll just stumble upon another piece of information, and you put the pieces together, and it really doesn't take too much time. It seems like it's rather difficult, but we went through the statements there and the press releases, and I mean, these statements they're short and they're concise, and that's what they want to do. And then, later you can start to work these into a tradable plan. I'm using that example with the euro. For example, it's pretty much built in already that the ECB is going to drop rates in the future at the next June event. Okay, so you can this is where it makes it tradable. All right, so we just covered the central bank sentiment. Now let's move on to the economic data, and then we'll move on to the geopolitical events. All right, economic data. Why is it important? It's direct view inside the recent activity of the specific economies you're considering. Okay, and then for the most part, this is in general, it's objective, fair, and transparent. Okay, the data coming out of China, it's very objective to say that that's probably not fair and transparent. Right, the numbers have been skewed, and that seems to be a consensus around the globe. The central banks make their monetary policy decisions based on these key economic data releases. Okay, that's the most important part here, because we want to follow what we want to know what the central bank is thinking, because they hold the reins to the economy. All right, the economic data. Let's start going through this a little quicker here. Let's see here. Yeah, this is key, and this is where I think it can get rather confusing for most retail traders, is not understanding and identifying the most critical economic events. All right, that's this will put you miles ahead if you can identify and prepare for the key ones, and then not worry about the rest of them. Okay, so filter through the key data, and then attend these releases, prepare for the events, and then look at what kind of price reaction the markets had with the the conclusion of the event, and then we'll create a bias based on that. All right, so economic data, identifying the most critical points here. Interest rates, it's all interest rates. This is on the right side of the screen here on this image, and the supply of credit from this is for the Federal Reserve. It all comes down to the interest rates, and the interest rate decision is based on inflation data, and then domestic spending, household, governments, GDP data, and unemployment data, and consumer price index. These types of things, and it all rallies around and kind of coalesce into the interest rate decision by the central bank. Okay, so here are some of the most important and followed economic releases. We have the interest rate decisions. That's first and foremost. So, which is followed up by any central bank activity. Right. So if governor is speaking somewhere and the market is very antsy on getting some sort of insight to which direction they may go, then we want to know that, and we want to follow that, and perhaps Bloomberg TV or somewhere else, they may cover that event live. Right. Then we want to look at the GDP data. This is important strength indicator for the economy, which is followed up then by the inflation data, the consumer price index, retail sales, the producer price index, manufacturer's price index. So it just this is all inflation data, and it's all important, especially the CPI and the retail sales. We want to know what those numbers are, and those can also be very, very tradable events. All right, so the central bankers will be making decisions based heavily on all of these 6 points here, and then the employment data, and then rounded up with the consumer confidence. Now there's a lot of other data here. I mean, there's housing and the list goes on, but I just wanted to cover some of the most general and well followed events. Okay, filter through your economic data. So this is the economic calendar from from FX Street, and you can see that I filtered the data here based on the most important events. All right, and you can do this with most of the economic calendars out there, and it just gives you a good overview of what's important and what's not. All right, and then mark these up or follow these and have an idea of which direction they may go. Okay, then after attend all the releases. Prepare for those releases. Look upon each release as an opportunity for a trade, which don't have to do that now, but at least get an idea or a direction for the currency after that release. So prepare for them. Look for the outcome versus the expectations. And if it's widely variant from those expectations, you're going to see price movement for the most part. All right, that's in general. And this is just from this morning. we can see that the unemployment data and employment rate and employment data from the UK with the claimant count change was less than expected. And we also had followed up by the Bank of England quarterly inflationary report, less than expected, and we just see a massive drop off. You can take a look at the charts today on pound. All right, so the more you're prepared for these kind of events and have some sort of bias or reaction to them, then you can see the result right in the data right away. Okay, and then putting it all together. All right, so you've filtered through the important data for the week or the month. You've taken a look at the numbers of the outcomes of those data releases, and now you've looked at and followed the recent releases to date by just attending them when they come around, and found what the variance in that data was and how the price has reacted to that data, and then look at the overall sentiment coming from the press. Look at some of the articles that are coming out and what they have to say, and this will give you a really good idea of the economic data and how the markets react to them. All right, so that's the economic data, and now we'll move on to the geopolitical events. And this is the one event that most of the retail traders can understand. It's a little bit easier just because we're inundated with news all day long. So the news that affects the market, so is what we're interested in here. All right, so we're looking at now this can be kind of convoluted, so we want to keep it really simple. But politics, elections, sanctions, wars, keynote speeches, earnings, M&A activity. We saw M&A activity earlier last week with the pound, with the UK, with AstraZeneca and Pfizer, which is still going on and still in the news, and that dramatically moved price. Right. Another one: weather, natural disasters, commodity supplies, oil. Hurricanes, typhoons, and or just cold weather. A lot of the cold weather has dampened the economic data that's come out of the U.S. recently. All right, this is rather difficult and really can kind of screw up some of the other directions from the central bank and from the economic data, because it's difficult to ascertain what's going on in the Ukraine. It flares up, and something happens, and the markets react to it, but we don't know when it's going to happen. So the timing is really difficult, and then the players are difficult. We know some of the main players. We have Putin, but we have Obama, and that's great, but there might be some minor players that come out and they say something, maybe not with Ukraine, but with some other issue, and it moves the markets, and it's hard to prepare for those. You just have to keep your eye out on the news and stay in the game. I mean, that's part of it here. So that's difficult. So with the geopolitical events, let's see. First, we want to identify the critical events that affect the specific economy. I'm going to keep it really simple here because we can drive ourselves nuts with this stuff, and then create a bias of those effects. All right. So identifying the critical events that affect a specific economy, it's always a question of coming back to as a trader, how does it affect the markets? Okay, what is affected? If it's oil, does it affect oil? If it's a war in the Middle East, it's going to affect oil. Who's affected by that? Well, Canada is affected by the price of oil because they export a lot of oil. Japan's going to be affected because they import a lot of oil. Right. So that's you start to make these correlations, not only of the geopolitical events, but also some of the economic data. And then, is it going to be, global trade that's affected? We're seeing that with some of the sanctions that are happening now in the Ukraine. Is it equities? Is it earnings out of the U.S. Or is it some sort of, production, coming from Japan, which is, highly reliant on their manufacturing. Okay. And then, get to know the key players. Now, this one's, like I said, it can be kind of difficult. I included a picture here of Boehner with that whole debt ceiling issue, which was really kind of embarrassing and just a debacle. In fact, a lot of the economic data that was coming out was overridden by Boehner coming out at a certain time and saying something that, we got along well, and we covered this and we covered that. I think the debt ceiling will be okay with it, and the markets react. All right, so we need to be able to shift and adjust to these types of things and understand what's important and what's not important. Okay. And the only way to do that is by just keeping yourself informed with it. All right, let's move on to keep it simple. Again, the key here is to, I think, always come back and ask, how does it affect the markets, and how does it affect me as a trader? Okay, so I think, for me, what really helped was to just check the headlines. Start with Bloomberg and Reuters, and keep it really, really simple. All right, and, you open one article from Bloomberg or from Reuters, and you read about it, and it leads to another one. It's like, well, wait a minute, what does that mean exactly? So you just kind of skim through these articles, get a feel for what's going on out there, and this will make a really big difference in understanding what's going on in the marketplace. Okay. So if you want to go more in depth, then the thread is it can be endless, but you got to pull back at some time and just keep it really simple. But links lead to other links, as we know. Anyway, and then overall, we want to bring it all back together and create a bias of those effects. Okay, so ascertain the importance of the developments. Was it an important event, or is it just BS? All right, consider how it will affect the markets. Have an outlook on how it will affect the markets. Write down the key bullet points that you think are affecting the markets and what might happen in the near future. Create a bias by summarizing that outlook. All right, so that's pretty much it. I mean, now we've looked at the full picture here of the fundamental analysis. These are the drivers of the markets, and we've covered the major players, what they react to, and outside pressures from geopolitical events that affect the markets as well. All right. So the goals of the webinar were to bridge the fundamental gap, to just show the correct fundamental data to be looking at, and then how to ascertain the information and create a guide that leads to a bias with the fundamentals. Okay, and I hope I did a good job for you guys. To summarize your analysis, just keep it really, really simple. Put it all together in a cohesive plan, just simple bullet points, and then now you can extrapolate this data and consider it within your market analysis, your trading strategies, and your technical analysis. Okay, and that's when it starts to really come together, because you can see, like, oh, okay, well, here's the fundamental outlook. Here's a technical outlook that goes in the same direction. And jump into the trade. Okay, and you'll just be amazed. Like, you'll be miles ahead of people that they don't even know, like, who Boehner is or what the debt ceiling is, and what's going on over in Ukraine and why the euro is dropping. And with putting those all together, it's helped me, and I hope it helps you guys. All right, that's it. Any other questions you guys have? All right, let's see. Not many here. Okay. What are the opinions you'd like to see? Live from Brooklyn, yeah. All right, yeah, helpful. And let's see. How long do you wait after a news release? I don't know what you mean by that. Oh, to make a decision. Well, Dwayne, this was something I wanted to avoid, was bringing in trading strategies into this. This is just to create this webinar, and maybe this will lead to future webinars of how to start to wrap some of the ideas from these fundamental biases and bring those into trading strategies. Okay, and that's exactly what we do at Traders for Traders. Brad is, he's been trading, like I mentioned, for years for the institutions, and he's a master of this stuff. I mean, he knows the fundamentals very, very well, who the key players are, and he brings that right into his trading and integrates it into his strategies. Okay. Let's see here. Nick, nice presentation. All right, great. Thank you. Oh, the PPI. You know what? I missed the PPI this morning, Nick, so I don't have any sort of bias on that. I'm sorry. I was working on this presentation. Let's see. Do interest rates have an ongoing effect in the market, or is it mainly the spike when announcements are made? Ian, that's a good question. This is a good point. It depends. Sometimes, like for example, I went over the euro. The interest rate is going to be already baked in, the interest rate decision. Okay, for the next June ECB conference. All right, because we're seeing the drop right now. It's all speculation right now. I think you will see a big move in the euro if they don't drop rates. Okay, I think that'll be the interesting thing to watch. So yeah, I mean, if it's a surprise interest rate cut or interest rate hike, yes, that affects the markets, and that can have a long-lasting effect. That's a big move by a central banker or the central bank, right? What percentages of your fundamental and trader and technical traders? Yeah, FX Bookie. I don't know. Good question. All I can tell you is this: from what I've seen in the retail market, it seems that almost all are, technical traders, and heck, I mean, we're always taught to, just stay out of the market when the news event comes around, okay, and then re-enter, 45 minutes later or something like that, and that's I think really bad advice. That's a missing piece of the puzzle, and it's one of the most important pieces of the puzzle. The technicals move. I mean, the fundamentals move the technicals. It's not the other way around. To ignore them and purely trade technically is really handicapping yourself. Okay, Ian, you were shorting the euro higher against higher interest rate currencies, so it worked out well for you. Yeah, good job. Yeah, I mean that's the kind of level that you can start to integrate this into different trading strategies, right? So euro is weak. Why? Because of these speculation on lower interest rates. Right. So then, go against the Kiwi, for example. Right. New Zealand, they just raised rates. Right. So But go back, read the statement, see what Wheeler has to say, the central banker, because he's kind of waffling a little bit too. He's coming back and saying that well, yeah, we're raising rates, and that's to basically to not keep things make things too complex, but basically that they're raising rates to cool the housing market over there, because the housing market's just going up and up and up. But they don't want to hurt the economy as well. So now Wheeler's kind of stepping back a little bit, and he's saying that they're going to be looking at the economic data before making interest rate decisions. All right, but so that's why we've seen the QE fall off recently. But in general, yes, Ian, that's a fantastic strategy, and I think that's how you can start to use this information. All right, guys. I think that's about it. If there's any more questions, then yeah, I guess we can wrap it up. All right. Yeah. Okay. Thank you. Yeah. Yeah. Thanks, Ian. Thanks, Fu, Hamashu, FX Bookie. All right, Raymond. All right. Yeah. Well, I hope it helps you guys. And just keep it simple, and just don't drive yourself crazy with this stuff, because it can be overwhelming. But if you look at the key points and just keep those key points really simple, you'll be amazed at how much you'll know, and for your trading. All right, guys. So that's it.